Utilities are on high alert, with performance plummeting 0.16% this week, and the RSI at 42. A critical catalyst is looming, threatening to upend the sector. This is what every serious investor needs to know about utilities right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we begin this week of June 8 to June 12, 2026, the overall market context is one of normal conditions, with the VIX at 19.6, indicating a relatively calm market environment. In this context, the utilities sector is worth paying attention to, particularly given its recent performance relative to the broader S&P 500. The utilities sector ETF, XLU, has seen a slight decline of 0.16%, which may present opportunities for investors looking for stable returns. This sector deserves attention right now due to its potential for defensive positioning, as well as its exposure to emerging trends in renewable energy and infrastructure development. As we dive deeper into the utilities sector, we will explore its current dynamics, risk levels, and potential areas of growth. Please note that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The utilities sector, as represented by the XLU ETF, has been experiencing a period of consolidation, with a weekly change of negative 0.16% and a monthly change of negative 2.98%. The Relative Strength Index, or RSI, is currently reading 42, which implies a neutral signal, suggesting that the sector is not overbought or oversold. This RSI reading indicates that the momentum is somewhat subdued, and the sector is likely to experience a range-bound trading pattern in the near term. The trend direction is currently sideways, with a lack of strong conviction in either direction. Key support and resistance levels are likely to be tested, and a breakout or breakdown from these levels could determine the sector's short-term direction. The current move does not appear to be a sustainable breakout, but rather an extended overreach, and a pullback to key support levels is possible. This week, we will be watching for a potential technical setup, where the sector may experience a bounce-off support, followed by a retest of resistance, which could lead to a period of consolidation. Now let us look at the fundamental catalysts driving this sector. The utilities sector is poised to navigate a critical week, with the FOMC rate decision likely to influence investor sentiment, as interest rates can impact the cost of capital for utilities companies, which in turn affects their ability to invest in infrastructure and grid modernization. From a macro perspective, the sector is likely to experience tailwinds from ongoing demand for renewable energy and grid resilience, as well as headwinds from potential rate hikes, which could increase borrowing costs. Key stocks such as NA, DUK, and so are signaling a relatively stable sector health, with their recent performance suggesting that investors are seeking safe haven assets in a period of market uncertainty, as evidenced by the VIX reading of 19.6. This week, we are not expecting any major earnings reports from the sector, but regulatory news and macro data on consumer spending and industrial production could move the sector. The longer-term fundamental thesis for being positioned in this space remains intact, driven by the need for grid modernization, renewable energy integration, and water infrastructure investments, with the sector's dividend yield and low volatility making it an attractive destination for income-seeking investors. Please keep in mind that this is educational content and not financial advice. Next, let us talk about the specific risks you need to manage this week. The utilities sector is facing several key risks this week, primarily driven by regulatory uncertainty, commodity price volatility, and interest rate fluctuations. Given the current volatility environment, with the VIX at 19.6, investors should be cautious with position sizing to avoid overexposure. Unexpected headwinds, such as extreme weather events or geopolitical disruptions, could further exacerbate risks. To manage downside exposure, investors should employ a disciplined framework, including diversification, hedging, and regular portfolio rebalancing. This approach can help mitigate potential losses and ensure resilience in the face of uncertainty. By carefully assessing these risks and implementing effective risk management strategies, investors can navigate the challenges in the utilities sector. And now for the strategic outlook. Where does utilities stand heading into next week? This week we maintain a cautious stance on utilities, given recent volatility in interest rates, which may impact the sector's attractiveness. A key theme to track is the ongoing shift towards renewable energy sources. Please remember, this is educational content and not financial advice. If you found this insight helpful, consider liking, subscribing to Financial Market Oracle, and commenting your utilities watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.